Hi, this is Doug Skinner from AFS. I appreciate you watching this short video. Today, we wanted to give you some insight from the bank customer's perspective and what we're hearing their concerns are and their outlook on business conditions. And then we'll contrast that with an update on what our bank lending data is telling us about commercial credit quality at the moment. Here are the results of a recent survey conducted by RMA and AFS. We asked the banks, what are your commercial customers' top concerns? And overwhelmingly, the number one concern was inflation and just the sheer cost of doing business right now. Inflation is everywhere. It's in wages, it's in the cost of materials, it's in the cost of transportation, it's just everywhere. And right now, this is a supply side problem. Consumer and corporate demand for goods and services has held up for the most part. Only very recently have we seen any evidence of demand destruction. As an example, mortgage rates are up about 200 basis points, and we're all seeing the results of that. Seeing a little bit in retail, but the Fed is raising rates and shrinking their balance sheet, but that only serves to subdue demand. Late last year, we thought we were making some progress with all the supply chain issues. Then we had the war in Europe, and then the lockdowns in China, and we've basically been kind of going sideways ever since. So it's the supply side that has to get resolved to really get out of this cycle. And even once we do that, many experts are starting to suggest that we may have to get used to inflation above the Fed's targeted 2%. There was an opinion piece in Bloomberg the other day that suggested perhaps 4 or even 5% inflation may persist for some time. Here's another signal of not so good news. This is the NFIB's Small Business Optimism Index. It's made up of 10 different components and is designed to provide an indication of the health of U.S. small businesses. And the reason that this is such an important economic indicator is because not only do small businesses make up over 99% of all U.S. businesses, they employ about half of all private sector employment, and they generate over 40% of our total GDP. And right now, these small business owners are not feeling very optimistic. The NFIB has been conducting this survey for almost 50 years. The average reading has been about 98 over that time, and we're at about 93 in April. So that's the 4th consecutive month with the reading below 98, and it appears to be falling. And the survey also noted that the percentage of small business owners expecting better business conditions over the next 6 months is at the lowest level they've seen in the 48-year history of the survey. So clearly, the impact of inflation has significantly disrupted the operations of many small businesses, as you would expect. Now, the commercial banking industry appears to be switching into reserve build mode again. After 4 consecutive quarters of net reserve releases, banks as an industry reported net reserve builds in the first quarter. Take a look at this chart here. Back in 2020, you had the huge reserve builds, which was driven by all the unknowns at that time about the impact of the pandemic, what impact it was going to have on the economy and for how long. Banks were also in the very early innings of implementing CECL, which required them to switch from reserving for incurred losses to expected losses. So that had banks being even more conservative than they may otherwise have been. But then as we got the vaccines and all the government stimulus, the worst case scenario did not really materialize. The banks started to release reserves. So the banks may now be starting to move back to a more normal build cycle. Second quarter is going to be interesting to see if we get faster than expected normalization here. And again, under the CECL methodology, banks are likely to adopt a fairly conservative economic outlook, given inflation, given geopolitical issues, and the Fed tightening. Now, we've been reporting for a while now that despite all these storm clouds, commercial credit quality has been holding up extremely well, and that remains true through April. Now, the one thing that does stand out is the extreme volatility we're seeing in short-term commercial loan delinquencies. So as context, over the last decade, during a normal expansion, we usually see short-term delinquencies stay in a fairly narrow range, somewhere between maybe 20 and 40 basis points. But since the pandemic, they have moved all over the place. There are a number of reasons that may be, but most notably, it's reflective of supply chain constraints and that causing all sorts of disruptions in deliveries and cash flow. So it's something we are keeping a close eye on, see if these migrate into more serious delinquencies or even defaults or criticized loan status. And we'll continue to follow that and report back to each month. So thanks for your time. Have a good day and give us a call or send us an email if you have any questions.